Hi everyone, hope you're all doing well, and today I'm talking about Corsair stock and if it's a good opportunity to go buy this stock. Obviously Corsair was a hot IPO in 2020 and it had a fantastic year, going up over 180%. And today what I'm going to do is I'm going to look through Corsair. I'm going to look at because it's a recent IPO, I'm going to take that into consideration and try and find some good value. And obviously with it being a gaming stock, the gaming stocks were really helped with the current situation that happened in the world over the last 12 months, and that really boosted sales. So we're going to take the look into that and see, can these sales continue, or is there a reasonable figure which these are going to drop down to? Now, I haven't really talked about a lot of new stocks on the channel, and it's something that I want to do a little bit more of. So if there's any certain stocks that you want me to cover on the channel, just drop them down in the comment section, and then I'll try cover them if they get the most likes. It's what I used to do. I just kind of stopped doing it just because it takes about 8 hours to put these videos together, and then working it like a full-time job, and then putting a big deep dive into a company, which takes about 8 hours. We're talking nearly 16 hours a day of work, which is sometimes a little bit too much. So I kind of just stopped it for a little bit, had a little bit of a break, but I'm going to try to do a few more now because I like covering the new stocks. And then whenever I see them have a big massive drop for some reason, I know the company in and out already, and it doesn't take me that much research to get back into it and maybe buy it. So yeah, I'm going to try cover a few more stocks like this, a little bit more, some new stocks. So if you could, comment down below, let me know which ones you want me to do, and like I say, the ones that have the most likes I'll look to do. If you could smash the like button, like I say, it does take a few hours to go through the research in this company, that'd be absolutely amazing, and subscribe as well. And this is a stock that is talked about a lot on my Discord group, so if you do want to join that, there's a link in the description. We have a Discord, we talk about a lot of stocks on there. There's also some portfolio reviews on there. There's exclusive content on there. There's normally 2 exclusive videos a week on there as well. And I also post when I'm buying and selling. And if you do want to start buying Corsair, there's a link to a free trade account and a Trading 212 account in the description. And if you buy through there, you also get a free share as well. But we'll take a look at this gaming stock Corsair. We're going to talk about the growth, we'll talk about the IPO, we'll look into the balance sheet, and we'll also talk about some risks in this company, because there is a few little risks that I have spotted when looking into this company. So we'll have a look. So Corsair is currently trading at $36. It had a bit of a decline yesterday, 5%, and I thought this was a good time to go look at how this company is doing, because it had a bit of a drop. Its all-time highs is $51, and it's come down to $36. Thought, is this opportunity now? And this is why I ended up having a look into this one yesterday. And it IPO'd around about $12, which is crazy because I would love to get in around about that mark. It's currently trading at a P ratio of 49, which is a little high. The market cap's about 3.3 billion. The CEO is Andy Paul, who has been there since 1994, so the founder and the CEO is still there since it started, which is also a brilliant sign. Now, Corsair is actually the reason why I ended up buying Turtle Beach in the end. Turtle Beach was a gaming company that I bought because I looked at the valuation and the growth, and I was really attracted to that. And Corsair is another gaming stock that does make me very interested, so I would not mind buying another company in this sector if I felt like there was a lot of potential here. So looking at the stock chart, we can see that it did IPO, it has had a good run up from its IPO, and it has dropped down a little bit now from them 52-week highs of its IPO. So it's starting to show some good signs of a pullback here, and if this is a good opportunity. So Corsair is a gaming company. It does a lot of different gaming devices. It has a great brand. It also owns a lot of other brands that you probably might have heard of if you're into a little bit of gaming. But also the brand is very well reviewed and it's got a good reputation. So as well as owning Corsair, they own Elgato, Scruff Gaming and Gamer Sensei. If we look on the actual website, they offer gaming gear. So gaming gear goes down as keyboards, headsets, mice, mouse pads, chairs, apparel, accessories and lighting. They also have streaming gear now, which is like capture cards, stream decks, audio, lighting, green screens, and also PC components, so cases, CPUs, fans, and sometimes you look at some of these setups that people have now and they're absolutely crazy. Like it's like a light show as well as having like a good PC setup. Also gaming PCs, software, and also involved in a few other things as well. So what I'm going to do is I'm going to hop across to the Corsair third quarter 2020 financial results, which were a very good quarter for Corsair. There were some pretty good numbers. And on this slide, we can see that there was strong revenue and EBITDA growth, robust pipeline of product innovation. So we'll take a look at some of the revenue growth. We'll look at the pipeline that's coming up. Strong cash flow generation used to repay outstanding debt. That'll be important because we're going to talk about the balance sheet because there's a few little red flags there. And we'll also talk about the IPO that happened as well. So this is the robust pipeline that's coming out in the next quarter. So we've got 2 new keyboards here. So they've got a new headset coming out for the Xbox, which is good because one of the big sectors in this industry will be the console upcycle in the next 12 months. So that's good. They've got some play in there. They've also got some new coolers, some new tower cases, and Epoch Cam. I don't know if that's how you say it. That's a new acquirement that they made. There's a few more details in there that we'll talk about in a little bit. So this is a new K100 gaming keyboard. These keyboards are actually very good. I've used one myself. They're very good. I'm sure they make good money on them as well because they are not the most cheapest things out there, but they are very good quality. Now this is one of the new recent acquirements that they did make. So they're going to move into the coaching and training sector of gaming, which probably will be a very good growing sector in the next kind of few years, I guess. So Corsair has partnered with Pipeline, which is an education platform to help streamers, and also they've acquired Gamer Sensei, which is the platform where if you wanted to get coached how to play Call of Duty better, you can go on there, you can get a Call of Duty coach, and they will help you improve, which is a pretty neat platform. And then we've got the new purchase that they've got, which is Epocam. I still don't know if I'm saying that right, but basically this is an app where you can turn your phone into a webcam. So that should be pretty popular with like streamers and everything like that. And also that's linked to the Elgato product that they currently have, which is one of the products that are focused on the streaming side of it. And when we look at the third quarter 2020 results, we have the Q3 to 2020 to 2019, you can see there's 60% year-over-year growth, which is important. We'll look at that a little bit later. We can look at adjusted EBITDA, that grew 184% as well. When we look at the balance sheet here, we can see that there is 116 million in cash. Now this is the little bit of a red flag part, which is 376 million in debt. So when we look at that cash to debt, that's 3 times cash to debt. That's a lot more that I like paying for, especially in this sort of industry. That does make me a little bit nervous. I would like that cash to be over probably at least 150 million, but I'd be more comfortable in like the 200 million part. So yeah, I guess the cash to debt is a little bit scary. Now when we look at the IPO did raise 118 million. With the IPO, they did pay 860 million of outstanding debt and additional 40 million prior to IPO. So realistically, this company was even worse in debt before the IPO. This company was, over 500 million in debt. So before the IPO, if it wasn't for the IPO, I would have definitely stayed away from this company just because of the amount of debt they have on there. That was a very, very heavy debt company. Now, it seems like the IPO has come at a good time to raise cash to pay off a little bit of that debt. So yeah, it seems like a lot of the IPO won't be helped. It seems like they've gone out and bought a lot of brands, which is great. But because they've bought so many brands, they've took so much debt on. So I think that it seems like a lot of the focus now will be trying to get that debt down because it is very, very high. So what we're going to do is we're going to take a look at the revenue and financial side of it. So normally previously to pre-COVID, and this is what I mean, because we look there and the company was growing like 60%. But then when we look at how was the company doing pre-COVID, and historically this company was only growing at 10% revenues. It wasn't a huge growth company before COVID. So we can see that COVID has definitely helped the numbers increase a huge amount. So realistically, we've got to consider that the company has gone from 10% revenue growth to 60% revenue growth because of the COVID situation. And, will Corsair be able to carry on with that growth numbers when everything gets back to normal? No. So it's really important that we look at that and consider that the growth will drop back down a huge amount and we buy normally a company that grows at 10%. Now, in my opinion, when we consider the amount of new gamers that have come on, the upcycle and everything like that, I don't think that it will carry on growing at 10%. I think this company will grow revenues probably a little bit more towards the 20% sort of range. So I think these numbers are a little bit sandbagged. I think they will be a little bit better than this, but it's worth noting that 60% is definitely not a normal growth year for this company. Normally you're buying a company with 10%, so that's something just to be aware of. Like I say, in my opinion, this company will grow at 20%. But yeah, that's just something to be aware of. That's what normal, when you take normal numbers and take them out of COVID context, that's the sort of company with growth that you buy in. It's not going to keep up that sort of growth at the moment. Now, like I say, balance sheet. this is the little red flag that I did have. It is a little bit ugly. You can see how ugly it was around that 2018 to 2020 mark. Obviously, it's made a lot of good purchases in that time, which should help revenue growth, but it is a little ugly on that side of it. It could be a little bit stronger. And one thing that I did notice in this sort of company here is I always like to have a quick look at something like the insiders and what's going on here. So like I said, Andrew Paul is the founder. He's still there in the company. He's the second biggest shareholder here. But I saw here 3 to 6 months ago that there was $129 million worth of shares sold on the insider front. And then I looked, and this was Eagle Tree Capital, and they offloaded a lot of shares here October and September. So then I look into the insiders, and Eagle Tree Capital are actually the biggest shareholder in the company at 76%. So I thought, how's this happen where Andrew Paul's such a small shareholder, but Eagle Tree Capital have such a large holding? And if they've got such a large holding, why are they offloading quite a few shares, especially with it being an IPO? So I looked, and I found out that Eagle Tree in 2017 bought a major stake in Corsair. So they've held this company for about 3 years at the moment. So I thought, well, that's quite interesting. They bought in the stake there, and now it's an IPO that they've started selling a few shares. So I thought I'd have a look into this a little bit more, because I want to know why first of all Eagle Tree came in. Is that because they wanted a little bit more cash because they had a lot of debt coming on here? But then when I looked into it a little bit further, I saw that something happened in 2019, and Corsair hires banks to explore sale or IPO. So obviously we know what happened from here. They didn't have an actual sale. They actually IPO'd it. So I'm looking at this company and I'm thinking, well, this company bought into this 3 years ago. Now they're looking at, well, they IPO'd, and they actually they were thinking about selling it or IPOing it, which kind of signals to me that Eagle Tree want to get out of this company. They want to either take some profit off there, or they just don't want to have it anymore. They want to take a nice profit of selling the company. But obviously they went for the IPO, and if they were looking to sell the company or IPO the company, it seems to me that they want easy transaction to sell out of their shares. And that seems quite obvious now. Like, Eagle Tree are dumping a few of their shares, so it seems like to me Eagle Tree wanted to push for an IPO so they could sell some of their shares and take a little bit of profit, just like any kind of investment company would. So it seems like to me that if Eagle Tree are jumping shares and they're going for an IPO and they wanted a sale, this is something to watch out for. I think Eagle Tree might look to dump a few more shares in the next coming few months, especially now that it's an IPO and it's a lot safer to do. So overall, what's my kind of opinions with this situation? Well, I think I look at the IPO and I'm thinking, you've got to be careful of IPOs, because IPOs, normally there's a lot of hype that goes up, and then eventually insiders have then the ability to sell, like Eagle Tree or something like that, that have been in there. That it's a lot harder to sell shares in a private company, but now they've got the ability to sell out of these private companies so easy. All they have to do is click a sell button. That's something really tempting for them to do. So we sometimes see like insiders flood out of IPOs in the first 9 months, and that's why I don't tend to buy IPOs until 9 months after. So there's the IPO that you just got to take into consideration. You've got numbers that are definitely not going to be able to continue year over year, which is something to be careful of. You've got the balance sheet situation, which obviously there's a lot of cash on, not a lot of cash on there to the debt, which is a situation just to be careful of. So I look at that, and I'm looking at the risk side of it with the management, and if they're looking to probably dump a few shares over the next few months, and the run up that it has been on as well. And there is a few little risks here just to be careful of. And like I said, generally with the IPOs, I don't tend to like to buy here. Something like a Pinterest, for example, you look at Pinterest, it IPO'd, it went up a little bit, the hype, the day traders, and then we saw like the ability for insiders to sell and everything like that. Stock comes down a little bit to like $19, even lower, and then that's a great opportunity to buy 9 months later, and then we have the massive shoot up in price, and that's tend to what I like to do on IPOs, and it's something very similar in the Corsair point of view. So when I look at the growth, it's definitely okay. Got some great brands there. There's a few little red flags to be careful of, like I say, but the growth with the products they have are fantastic. And I'm thinking, I'm looking at this company and I think it is one that I want to own, but when I put like the risk to reward, and it's a 40p company, I'm thinking that this company does have to come down a little bit for me to buy. It has to come probably below $25 for me to consider it. And another thing as well is that I own shares in Turtle Beach. And when I compare something like a Turtle Beach to the Corsair situation, I compare the P ratios from Turtle Beach to Corsair. Turtle Beach is a lot cheaper, and compare the revenue forecasts from analysts. The analyst forecast is very similar. I look at the cash, Turtle Beach is a lot stronger. I look at the debt, Turtle Beach is once again a lot stronger in this area. And I'm thinking Corsair has a lot of amazing brands here, and it has the potential to be a bigger company than Turtle Beach, but I'm already in a company in the sector, and I'm still looking at these two companies and comparing them. Like, I still think Turtle Beach is the better valuation in this sector, and that makes me more inclined to still buy Turtle Beach, even though I do like this company and it has a great brand as well. So I've got to take that into consideration. I do still think there's a better company in this area. I think that Corsair is one that I do want to buy, but like I say, when you look at the drop, the growth will go back to normal. The balance sheet, the IPO, you also take the risks of like the insiders that clearly want to sell the company, and then the valuation. I'm comparing that to something like Turtle Beach, and I'm still can't cross the line on this one right now. But it's something I do really like. It's one that I will consider if it does have the classic IPO drop, and under $25 is definitely where it gets interesting for me. But yeah, I think that little finding out about the insider situation was something that did just kind of put me off a little bit, and definitely makes me want to wait another 9 months to see how much to sell out. So hopefully you found that useful, and if you could, smash the like button. If you're new, make sure you subscribe as well, that'd be absolutely amazing. Hopefully you found something useful, and I'll see you in the next video.